Most people think banks keep money safe. That's true. But that's not how banks make money. Banks are not storage companies. They are businesses. And like every business, their goal is profit. So how do banks actually make money? Let's start with something simple. When you deposit money into a bank, the bank does not just lock it in a vault. They use it. This is called fractional reserve banking. Banks are required to keep only a small percentage of deposits in reserve. The rest? They lend it out. If you deposit 1,000, the bank may keep only a fraction of it. The rest becomes a loan to someone else. That loan earns interest. And interest is the primary way banks make money. Here is how it works. You deposit money and earn maybe 1 interest. The bank lends that same money at 6, 8, or even higher. But interest is not the only income source. Banks also earn money from fees. Account maintenance fees. ATM fees. Overdraft fees. Late payment fees. Loan processing fees. Sometimes, these fees generate billions in revenue. Then there are credit cards. Credit cards are extremely profitable for banks. If customers do not pay the full balance, interest rates can go above 20. On top of that, banks charge merchants transaction fees every time you swipe your card. Next, mortgages. Mortgages are long-term loans with interest. Banks either keep the loan and collect interest, or sell the loan to investors and earn fees. Either way, they profit. Banks also invest. They use part of their capital to invest in government bonds, corporate bonds, and other financial instruments. Large banks also provide services to corporations. Another important point is leverage. Banks operate using leverage. They use borrowed money to generate more profit. This increases returns, but it also increases risk. That is why banking regulations exist. Now here is something important. Banks create money through lending. When banks issue loans, new money enters the economy. This expands economic activity. That is why banks are powerful institutions. But here is the truth most people do not realize. Banks make the most money when people stay in debt. If everyone paid off loans instantly, bank profits would shrink. This does not mean banks are evil. It means debt is their product. Understanding this changes your perspective. When you borrow, you are buying their product. When you deposit, you are giving them inventory. Smart people understand how the system works. They avoid unnecessary high-interest debt. They build strong credit. They use banks as tools, not as financial crutches. Banks are not your enemy. But they are not your financial advisor either. Their goal is profit. Your goal should be freedom. Learn the system. Use the system. Do not be controlled by the system. Because once you understand how banks make money, you stop being surprised by fees, interest, and debt traps. You start making smarter decisions.